All right, everybody. I wanted to make a little follow-up video to the little lesson I did the other night. And if you're new to our software, this is your shortcut to seeing the best trades and recognizing the best trades. So in our trend trading plan for the S&P and for really basically any market, and it doesn't really matter what chart size you use, but there's some key things that you're going to have to do. Number one, is the market coming from a good top or bottom? You can trade a good trade if it's not coming from a good top or bottom, but you typically will have to manage those trades a lot quicker. The better the top or bottom, usually the easier, better, bigger trades you get. Trigger lines have to be favorable, meaning very strong, crossed up or down. You've already gone through the educational material. You know what that means. Entries are at Fibonacci areas. And when we say area, we mean Fibonacci area, mid-band, one-to-ones, blue fibs, red fibs, inside of the large triggers on the 13.2 chart. This is for the Nasdaq. So the Nasdaq doesn't use 13.251. Nasdaq uses 34.5, 13.2. Make sure you never trade against. Short version is I'm going to give you the visual. And this is midnight, Thursday night. So this would have been the 22nd. And we're going to just review the 23rd and go through what would have happened or could have happened and where the trading opportunities would have been for you doing trend trades. So the first thing that we're going to do is we're going to define a good top or bottom. You know, it's really good to help notice divergence. Divergence by itself doesn't make a good top or bottom. But when you break Fibonacci support, this is where we start to make a good top because we've broken support. And again, it's this really wide trigger line look when we break support that's going to give us the favorable conditions. So what I've done, and I don't know if there's trades after this, we're going to go find the trades on the small chart. But I wanted to mark up the big chart first so you can see where the change in trend is significant enough that we should start looking for trades. Does that make sense? So as we progress forward, the divergence and then subsequent red fib, blue fib turning red is the reason why I have this box here. As we go forward, you can see the same thing. We have blue fibs and both sets of triggers get past it. So there's red continuation to the downside. Same thing will hold true if we get through blue fibs and break fibs with strong triggers. So we'll have more red opportunities for sells. And then ultimately, if we have a termination condition on the bottom, this is our pivot stop out, meaning we had divergence and then a second divergence from a line. And then subsequent large triggers and small triggers that are in a very strong momentum phase. We'll look for long trades. Now, you can see this one kind of messed around a little bit and put in another higher divergence. That's a third divergence and two higher divergences. And that's a really good look for us to continue taking long trades as long as both of our triggers have rolled up. This one's a little bit different because the smalls are above or below the large. But you have to keep in mind we had a good bottom. They did a little razzle dazzle here in the middle and then took off again. So this is a very common pattern. Now, as we go forward, we had divergence from one-to-ones that eventually rolled the triggers. And again, you don't know that this divergence is going to roll the triggers until after the triggers are rolled. So, you know, the selling opportunities would start more in this area here after both triggers roll. And then breaking a fib, more selling opportunities. And then I put a white box on here. This is one that we deal with a lot in the market. And the sooner you get this one down, it's really easy. It's really simple. I've got an example picture, an old example picture here. Let me just show you this example picture. It's from a long time ago, but this is what we call a 50-50 look. And it's not odds of winning or anything else. It just means that you've broken an area of Fibonacci or mid bands or one-to-ones or any of the horizontal lines. But the large triggers are still above that area and the small triggers are below. And essentially this, yes, you can do a trade. And again, when we talk about, this is where we go look at our smaller chart and we say, what happened down here? Do we want to take a 50-50 or not? So it's a good look for down, but the 50-50, meaning half the triggers are above the area, half are below, those are the ones that we have to manage a little more assertively. So what I did on this, I drew a white inside to the box. And again, you can see the 50-50 look, which is very, very common. Half of the small triggers are above the area. And again, when I say the area, look, this is the area, fibs. So I'll just draw a box. Forget about the color of it. That's just the fib area, okay? So what I did, since it's 50-50, is I drew a white inside box here because we're going to manage these 50-50s a little bit different when we go look at the smaller chart. And then, you know, we get down and we start going down and we have a 50-50 to the downside. And again, hopefully this 50-50 look being explained is really easy. Yes, it's going down, but the smalls are below the blue fib and the large are above it. Do we want to take a trade? Depends on what happens on the small chart. And we'll go look at these as we go forward. So just kind of giving you some definitions here. And again, we had divergence, but we hit resistance and we hit resistance. And, you know, eventually our triggers rolled down, but there, you know, there wasn't a real strong look here either way, trigger line wise. Maybe over here for half a second, but then that was it. And then we had, look, very bullish pattern, higher divergences. So lower divergence and then a higher pivot divergence with a subsequent breakout of Fibonacci resistance with strong triggers. So that's a really good look for us, going all the way back to these two divergences and this. So at this box, that's when these two divergences become very powerful. And again, that's why, you know, sometimes a new chart reader is not looking back at this divergence. They've forgotten about it. But when you step back and look at the chart as a whole picture, you see divergence and higher divergence, and that creates a really good breakout to the upside that we want to take trades with. Now we hit termination, yellow 1-to-1s, and then our triggers got strong and we broke fibs, so it's sell, sell, sell. Broke fibs again, and then ultimately we had divergence from fibs with strong triggers, so that's going to be where we start looking for buy signals. So I drew a blue box in. And then as we go forward, same thing, strong up, kind of 50-50. We had a really good bottom. Divergence, higher divergence, pivot stop out, and then strong triggers. And then ultimately, maybe, there wasn't really a lot of sell opportunities here because you're trading into support a lot. Maybe here as we started going down, I probably should have put one, right? Because when you're in this situation live, right, that's a really good look for going short. So again, I just added that one in there. Again, you can see what happened, but we're going to go look at the small chart because I think, look, reading the large chart's not really that difficult. It's up or down. You had an area with divergence or not. The triggers are strong or not. That's it. You don't have to know anything else. There's nothing difficult about the large chart reading. So we're just going to kind of buzz through it. We got to support. I guess I could have put a 50-50 in here. See the 50-50 again? I'll just draw a circle there for now. But you see it, small triggers are above the fib, large triggers are below. Yes, you can take a trade, but these are the ones you got to be cautious of. And then obviously break a fib and strong triggers going down. We're looking for short signals, right? So this is only 9:45 in the morning. Nasdaq has a lot of opportunities. Now look at the bottom, divergence, 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 and a pivot stop out. That's the super awesome, ultimate termination down here. And then subsequent strong triggers breaking through, and then obviously we can start looking for long trades. We hit resistance. Now we hit resistance with divergence, and we have our strong triggers going down. So somewhere about right there, we're going to start looking for short trades. And then obviously that gave out. And we had a pivot stop out with divergence, but look what happened. Large triggers didn't roll. So what happened? We ended up making a lower divergence or a higher pivot divergence with both triggers rolling back up. So we headed back to the upside. Then we had divergence from resistance, but we ran right into mid bands and 1-to-1. So it's kind of termination and termination. And then we had a double divergence pivot stop out. And then that's the point where, you know, we can really say to ourselves, we're going to start taking short trades if. And then, you know, this is the same pattern we had earlier. Look at it. Watch. Remember what we had down here at the bottom? 1, 2, 3 divergences. Or we had one and then higher, and that created a good move up, or one and then lower, and that created a big move down. So now we're up here at the top, and look, we got 1, 2, and then we have a lower divergence, and that made a move, which was short-lived, and that happens sometimes. That's okay. And then ultimately we had fibs, but the triggers never rolled, so no shorts. And then we broke fibs, so we would take longs. And then we had divergence from 1-to-1, so we would stop taking longs, and we would look for shorts if triggers are strong down, and they were, so we're going to find trades. And then back and forth, so more shorts when we're breaking through 1-to-1s. And then ultimately we rolled up and got above the 1-to-1, so you could take some longs. Wasn't a great bottom, so kind of short-lived. And then they resumed the downtrend again, which is very common. And then just to go forward quickly, 2 divergence lows, and then the triggers start to roll and we get long trades. Fibs break, and then we get more long trades. And then ultimately we get divergence from the high, which is not, you know, that's not really the short. The short is when or after divergence breaks the blue fib, and then the triggers are strong, and then we can maybe take short trades. Same thing happened in the afternoon. We had divergence from fibs, and that's not really our short. It's a great stopping, you know, it's a spot. But not until the triggers roll over do we get our short trades. So we get shorts, and then we eventually hit a fib at the bottom. And then the fib made the triggers roll, so we can start looking for long trades. Then we had termination and triggers roll, so we can start looking for short trades. And then they horsed around 1, 2, 3 divergences. And then after the triggers rolled again, we can start looking for short trades. Then they had a pivot stop out. After the triggers roll, we can start looking for short trades. And then ultimately, you know, we had divergence at support. But that was the end of the day. So what I want to do now, I know that was kind of long-winded, but what I want to do now is I want to go look at where's the money made or lost. Because, you know, the small chart's where you're going to do all your entries. So we'll go back and we will, let's find midnight. So here's our midnight, where we started. And again, you can kind of start, you know, we'll do a little bit of chart reading here. You can kind of start to see at the high that the smaller chart already gave out on us, right? So what we were looking for at some point after, you know, remember why this box is here. This box is here because the large triggers are strong. So the box is there because we've already had a good top or bottom. The box is drawn on there because we've already had odds favorable triggers on a large chart. So all we're looking for now is, did we run into something that's going to kill the trend, which we can see on the small chart too? Or did we get an entry inside of the triggers at some kind of support or resistance? So let's go forward. And again, you can kind of see the precursor to a good top also was a pretty good top on the smaller chart. And then look, nothing but short trades and less. Now, if you're doing momentum trades, maybe that might be one right there. If you're not really into momentum trades, you would have been looking for some type of trend trade pullback here or here, and they just didn't give it to you. So it's cute. They went down. It said it was going down, but sometimes there's not always a trade. As we break through fibs on the other charts, again, you can take another trend trade. And again, it becomes difficult because the areas of resistance for us, even though it went down, the areas of resistance over here are not really inside of the large triggers. So maybe if you took one right there, but again, that would be a difficult hold. The only time it really is easy on this chart is after what? This support breaks, and look what happens right here. We finally get the indicators and the large triggers to come together so you can take a short trade right there with the anticipation that we're going to go from 69 down to 51. Now, that's 14 points on the Nasdaq. So what does that mean? What's points? So 1 point on the Nasdaq is $20. So let's assume you're trading 2 contracts. So if you were trading 2 contracts and you got 14 points and it's $20 a point, this move from here to here is $560 on 2 contracts. And again, that's kind of what we talk about, you know, where is the money made? How much money can you make? We'll go look at all this. So again, from here to here, and again, we don't know what's going to happen next. We can see what happened now. You can see clearly that Fibonacci support and divergence stopped the market, and then that would have been the end of any short trading for the moment. So they went from resistance to support, back up to a pivot stop out of resistance. And again, this is not necessarily another short trade because we're talking about trend trade rules here, but you can see how it kind of plays out. Now, as we break through, and again, the large chart's probably still in a downtrend this whole time. So as we break through, we're saying to ourselves, can we do another trend trade? And the answer is yes. I mean, probably the only spot to do it from would have been, can I just make this box where the trade was? Probably would have taken the trade right there because that's the only resistance with the triggers. And, you know, based on our rules, you would have gotten in here, but you would have had a stop above this pivot. And then ultimately, with a higher divergence and a green background, you would have gotten out. Now, that doesn't mean that they're going to stop going down forever. You know, once, you know, they get done going up and the small triggers roll back over, a lot of people will take a second chance at the same short trade, assuming that the large chart still is favorable. That's more of a continuation trade when you go through the educational material. This is a trend trade. This would be continuation. And again, if you're not into continuations yet, that's okay. But waiting for the small triggers to roll over is the trick. All right, now they made a good bottom. And look, this is where you know, you don't know what's going to happen next. The only thing that you know for sure is that because we have this box here, we had a good bottom on the large chart and the triggers are going up. So where's our trade? Well, our trade would be inside of the triggers at support. So about right there. And much like that other trade that we just saw, you know, you get in here and then our rules tell us what? If you have a lower divergence, get the heck out. So again, maybe a small loser in here. There's not a lot going on. And again, this is where, you know, we're waiting for the large chart to get synced back up again. So again, that was the first attempt. And then after the large chart says it's okay to go again, you know, we get this, you know, basically this big blue box, which told us it was okay. And what we're looking for is trend trade rules again. So where all the triggers and everything coming together, that's what our trade is. So look, our trade to go long is inside of the triggers at support. So this is the trade area for you. And then ultimately we have to say to ourselves, what happened, right? What happened after the trade area? Because you don't know what's going to happen. The only thing you know is that the market's going up and everything comes together. I hope I can get a fill, and I hope it goes up. So it got in, it went up. We made it to the resistance. So look, from, let's just call it 52 or 51 up to 70. So you're looking at 19 points now. So 19 points times 2 contracts times 20 bucks. That's $760 from here to here. Maybe it'd be helpful if I had both charts side by side so you can see it. What do you think? That way you don't have to use your imagination. Bear with me here. And again, these are the types of things you guys need to do with your charts when you're studying your history. All right, so let's go back. So we're at 3 o'clock in the morning. Let me put this one back on 3 o'clock. Bear with me. Okay, so here we go. So this is our longs, and you can see, I mean, I think on this chart, you would agree that we could do a long trade with this look. And again, we got in, but remember what happened? You got in, but there was a lower divergence, so you got out, and then they messed around. And again, the large chart never said go down. So this is where you have to not get all enamored with the small chart looking like it's going down. What you're waiting for is the large and small chart to line up again. So when the large chart finally says, okay, we're going back up again, now we're looking for this confirmation that we have the same read. Both charts say we're going up, and that's where we end up going long. So again, this one was worth about 760 bucks. And as we go forward, so the large chart had divergence and everything's going down. Let's see if we can find a trade. Again, if you're doing momentum trades, maybe, probably not. We're just going to stick with trend trades. All right, now we broke support, right? That's why we have this on here. And we're looking for some type of short trade from resistance inside of our triggers. So this is the first spot right there where we have mid-band inside of the triggers, and that would be your short. You'd literally put a limit order in right there. So call it 39. And then hopefully we make it down to fibs. So just go into the first fib from 39 down to 16. Help me out. What is that? 25 points? 24 points? So 24 points times 2 contracts times 20 bucks, 960 bucks. And that happened in a whopping 9 minutes. So, again, the precision when you let everything line up is really, really, really fantastic. So let's look at both of these together. That's all there is to it. You wait for the large chart to say go, and then you're looking for the smaller chart resistance inside of the triggers. That's it. That's our whole trading plan. It's not difficult. You just have to wait for everything to line up, and it's good stuff. All right, so let's go forward here. And let's see where we got our next change. So this is one of those 50-50s we talked about. So this is a real good lesson on 50-50. Traditionally, if you have a 50-50, you can take a trade. So, we have to ask ourselves, there's two things when you're doing a 50-50. The first one is, dang it, I didn't mean to minimize that. Hang on. The first one is, what happened on the high before the 50-50? Was there divergence? Did we have a termination? Did we have a pivot stop out? Was there good reasons for the market to stop? And if there wasn't, then we can usually take the 50-50. And 50-50s, so, again, mid-bands inside of your large triggers. So 36 up to 50, that's 14 points potential. 14 times 2 contracts times 20 bucks, another $500 from there to there. And that took a whopping 4 minutes. Not so bad, right? Now, if you have a 50-50 on the large chart, the small chart termination condition will kill it. So you see this divergence from a fib and 1-to-1s, termination. That's the end of a 50-50. Don't even think about it again. It's over. It's a one and done situation, basically. Pretty easy, right? Triggers are going up strong, and you don't know what's going to happen. So let's look at them side by side. Triggers are going up strong. Buy a pullback to support inside the triggers. Get out at resistance. Everybody's happy. Now, like we said, these 50-50s sometimes die off. I didn't plot any synthetic fibs, so if I drew that fib in, you'd have a fib up there, but you can see the fib right there, right? You don't need them drawn in. All right, so let's go forward. Sorry for my voice here, got a little scratchy. Another 50-50, half above, half below. So let's figure out what's happened. All right, so this one's not as easy. Again, why is it not easy? Because you have to ask yourself what happened here before you're thinking about doing 50-50s. Well, we had divergence from a fib. And then we had a pivot stop out from a fib. 2 strikes against going short. Now, it still went down anyway. And you can see, right from resistance and the large triggers here on this chart. Now, notice the difference. We don't want to go short necessarily at support. Could you use the red resistance as a sell area when you have a 50-50? Well, again, you have to kind of weigh out the 50-50. How strong is it? Right? Is it really, really, really strong? Is it worth it? Maybe it is. Maybe it is. And if you're going to skip them, that's okay. Oh, shoot. I messed that up. Sorry. Bear with me. Going back to 4 o'clock. Anyway, 2 really good examples of 50-50s for us. So 50-50 long up to resistance. No 50-50s at the mid-band after support. Maybe a 50-50 at resistance. I would be more inclined to sell the resistance than a mid-band. Anyway, food for thought. All right, now as we go forward. So let's put our scaling back up. So we have divergence from the low. And again, look at the small chart. When we had this divergence on the large chart, look where it started from on the small chart. Right at Fibonacci support. 1-to-1s, divergence, fibs, beautiful spot. Now, when does the large chart agree with going up? That's the other part of it. If the large chart doesn't agree with going up yet, we don't really get a long trade. Right? Not a high probability long trade. So after we have the second divergence on the large chart, we end up getting, this is the spot where we said the large chart says start looking for a long trade. So we have to go, look, assuming you're in the live market here and you say, oh, wow, my large chart says it's time to go long. Well, you see the same thing here, right? Come on. That says go long. There's nothing in the way and you got fib support. So for us, where's our trade? Where's our trend trade? Well, it's inside the mid bands and the triggers, right? Mid bands, 1-to-1s, fibs. So this is our long trade spot. And then we have to ask ourselves, what happened? Well, we went up. Did we make it all the way to resistance? No. Let's see what we had on the large chart. Bear with me. So I'm squeezing up the large chart just a little bit for us. Okay, so look, here's what we did run into something on the large chart. So this is our long trade. And I think it's pretty easy to see on the large chart what happened, right? So the large chart was very strong up. So that's your long trade. And then up here, we ran into 1-to-1s. Well, that's going to be a termination spot for us. So again, that's a good exit spot as well. So for us, the long trade would have happened roughly right here. So, I mean, you would have put a limit order right here. So you're buying on the way down, and you would have had a limit order at your 1-to-1s to get out. So you're buying 28, let's just say, to 44. That might be a little bit generous. Right? So 44 minus 28. So you're looking at 16 points times 2 contracts times $20, another $600. You pretty much make $500-600 over and over and over and over on the Nasdaq. Now, divergence on the smaller charts, even a lower divergence from the 1-to-1s, and we're going to start looking for short trades if we break support. So this one's very easy to see, right? Again, it's the same exact thing. Mid bands, fibs, and 1-to-1s inside of your large triggers, and you're going short. And just to bring it together, you can see we clearly made it to support. So we'll call it 27, 28 down to 09. So just call it 28 to 09. So 19 points times 2 contracts times $20, $700. Because when you're getting in here, you've already got a limit order in over here, trying to get out. Does that make sense? So you already know, pretty much where it's going. And then ultimately, if it goes there, you're like, yay. And then if we break a fib, guess what happens? Rinse and repeat. This may be a common theme that you've picked up on. Mid bands, fibs, and 1-to-1s with the large triggers. So you'd be selling 08 on the way up. Profit targets down here at 86. 22 points. So $800-900 right there on the Nasdaq pretty easily. And that's from 8:20 to 8:34. 14 minutes. Not so bad, right? And again, I want you to be able to see it on both charts. So when you see it on both charts, I think it makes a lot more sense. So clearly we had a good top. 1-to-1s with divergence. First short trade, second short trade. And that one actually went way, way down. But again, you don't have to get the big move to make money. You just need a few good moves. So here they are together. Good top. 1 short, 2 shorts. Winner, winner. I'm not going to say chicken dinner, but you know I was about to. All right. And again, as we break through fibs, again, it's the same thing over and over and over. At what point do we have fibs and triggers with the favorable look to go short? And this is the only spot that happened on the chart, right there. It's the only spot. And you can see the result again from resistance down to support when the large chart's really helping us. And again, did it happen one more time? Absolutely. Where did it go? It went down a long way. Now, what stopped it? Pivot stop out at the bottom, right? And then we were saying that we could possibly take a long trade. So where is our long trade? I know you're going to say this is crazy, but mid bands, 1-to-1s, and a prior divergence at the large triggers. And again, this one went up, and we ended up putting in 3 divergences, which kind of ends the short-term trend. It doesn't end the long-term trend, though. And the long-term trend eventually kept going back up. All right. Do you see why you can't just look at your small chart and go, I'm going to go long here, or I'm going to go short here? You can't get the right information when you're just looking at your small chart. So if you're hyper-focused on your small chart all day long because it's busier, you're looking at the wrong chart. This is the chart you're supposed to focus on. Because only when you have the large chart really screaming one direction or the other do you go in and start looking for your trades on your smaller chart. And we could do this all day. I mean, this is after the open right here, but you see it, right? Break in fibs, strong triggers, lots of divergences, strong triggers. I mean, you could go look at any of these on the smaller chart, and you're going to basically see the exact same thing every single time. Watch, we'll go to 955. Just to show you how similar everything is. So the large chart said we were going up, and you're going to buy mid bands inside of your large triggers. And then ultimately, what happened next? Did it go up? Could you have made some money? That's all you need to ask yourself. The answer is yes. You can make a freaking killing. You just have to wait for the large chart to say it's okay. You know, look, the large chart said it was okay. If you're not doing momentum trades through 1-to-1s, that's okay. You probably took a trend trade right here. I can almost guarantee it. Look, it didn't work. Remember all my praises, mid bands, fibs, 1-to-1s. Look how beautiful, winner, winner. Well, this one would have lost. Tough. Happens. Now, usually when a good trend trade loses, you know, they keep going most of the time. Sometimes they turn back around and give you another chance, but all right. So now, then again, I think this exercise in drawing the boxes on the large chart is really important because only after the large chart says it's okay do, you know, we get to 10 o'clock and we say, okay, let's find some trades. You're not trying to find trades in the spots that, you know, don't line up real well. Now, when everything lines up, large chart, small chart, it's like stealing almost, legalized stealing. Now, you're still taking a risk. So you're not stealing anything. You're providing liquidity to other traders who want to go short right here. Right? If you didn't buy, somebody couldn't go short. So somebody wanted to go short there. It's just not us. And as you guys progress through your charts and you just wait for everything to be going your way, and then eventually you're going to get your trend trade. Now, can't guarantee you're going to win them, right? You're going to win about 70 or 80%, but that's your trend trade. And then our rules say if you get a third divergence, you get out. So you can already see where the exit is. You see why we have that rule. And then if it goes again, we get, you know, maybe another opportunity to go short that doesn't really follow through. You can take a few losers every day, I promise you. Just, especially on the Nasdaq. You're going to do 20 winners and 6 or 7 losers. It's just the way it is. All right, we break through and you pull back to mid bands and triggers. They ran a little bit further and then they ran up. And then good top, we break through and then we end up with the opportunities to go short. And we break through fibs and you get another opportunity to go short. And then fibs hold. I guess I shouldn't put that color on there, right? Guess I could do it like this. Fibs hold, which means stop going short. And then the large chart says we can go up, and look what happened. And then the large chart said we could go down, and we get the same thing in reverse. And you'll see sometimes there's 1, 2, 3 different, you know, trend trade opportunities in a move. And then ultimately there's something that's going to stop it, no matter what it is. Then, you know, again, when you get 2, 3 divergences and the large chart says you can go long, we end up with, usually the market does a really good job of behaving. And then eventually, let's see, the market breaks out above fibs. And maybe you didn't get one here, but probably over here. Tough to stay in that one. until, because look, you had 3 divergences, so I'll explain it, right? So you got to get out. Now, if the large chart remains up, once everything says it's okay again, you go long again. So it's not just, one and done. It's just whenever everything lines back up again. And then ultimately, let's see what happened. It was basically up the whole time. So, whenever it goes up and stays up, as long as you continue to have trend trade longs, you could probably take them. Of course, you have to manage out of that one. And then a bottom, and then ultimately the large chart said it was okay to go down again. So you're going to see very, very common. Pull back to 1-to-1s, large triggers, and the market goes down again. We break fibs, and you're going to just keep going short until something stops. And then if we break out again and the large chart says it's okay, you could do more short trades. And obviously we went way down and way down again. And then ultimately this is where the large chart started to say we could go long again. So you get kind of a little momentum play, and then you get another trend trade, and then you get one more trend trade. Again, the key is large chart says it's okay. And then we get to go down. Probably your trade right there, first trade. Look, is it clear on why you have to avoid all this stuff? Because you're going to get slaughtered. So again, we did a little lesson the other day, but the short version is, in our lesson, make sure that you have a good top or good bottom in your large chart. Sorry for my voice. Once you do, then you go look for your trend trade on your smaller chart. You'll do a lot better with your trading. All right, I'm done for now. I appreciate you guys paying attention. I hope this little lesson was helpful for everybody. Have a great day, and we'll see you guys in class.